G'day folks, welcome back to another natural gas update. We're still bearish on the daily charts. We're going to include some back testing as well, just to give you the results, what they should look like. Before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook as of today, March 26, for BOIL seeks to achieve twice the daily performance of the Bloomberg Natural Gas Sub-Index. KOLD aims at twice the inverse of the daily performed Bloomberg Natural Gas Sub-Index. And UNG designed to track the daily change in spot price of natural gas through near-month future contracts. In terms of AI data processing geopolitical events, the expansion of AI data centers is projected to significantly increase electricity demand, with natural gas expected to supply approximately 60% of this growth, leading to a 10% rise in natural gas consumption by the power sector by 2030. In contrast, geopolitical events can cause immediate and unpredictable fluctuations in natural gas demand and prices, such as supply disruptions or policy changes, leading to short-term volatility in the market. While AI-driven demand represents a steady long-term increase, geopolitical factors introduce abrupt and variable impacts on natural gas consumption patterns. So looking at the long-term trends first on natural gas, on the monthly, both the CCI and the price are broken above the moving averages, giving us a bullish signal. On the weekly, likewise, both currently still bullish, although notice on the weekly it's approaching the moving average band, which is showing a bit of a retrace to the downside, although still predominantly bullish on the weekly. And on the daily, if I zoom out, you can see there we've got this, I'll put some lines in there. You can see there it's hit this resistance up here at 49.30. It's currently tracking, it was tracking along this diagonal ascending trend line. Now it's broken to the downside, and it's bouncing off this minor support at 39.45. But you'll notice the CCI is broken below the moving average band, giving us a bearish signal. So bearish predominantly at the moment, according to the daily trend. If we go to the intraday chart, looking at the 1 hour, you can see there again using the daily as a reference, taking short trades only. And you can see here it did actually break quite strongly to the downside below this diagonal, and it eventually bounced up and hit that moving average CCI band. Now you'll notice as well we've got higher lows on this CCI versus lower lows on the price. That's a bullish divergence, and what that means is, assuming it keeps rising from here, we're going to expect a rise to the minimum. Let me get rid of that. To that high, we take it back to the significant high before that divergence started, and that's going to correspond with this previous support. Now it's a resistance at 39.45. That's a minimum retrace. We expect it to reach that level at least in the coming hours. It could go a lot higher, of course. We never know how far these are going to go, but we take it one step at a time. But at the moment, you predominantly take short trades according to the daily. So here we have the back test, and I've got the back test starting here from the point where the CCI and the price broke into the moving average range. So it starts from about the 12th of March. Up the top here, we've got the profitability graph of the stop loss approach, and if you let it run until today, the stop loss approach has generated 2,635, whereas the average down approach has generated 7,370, and it's averaged down a few times there. I'll show you the trading parameters of that at the end of the video, so stay tuned. So at the moment, predominantly still bearish momentum, and you close out the trades on the short side once that daily hits that moving average band on the CCI. As I said, you will notice we've got a bullish divergence at the moment, so that could actually have a bit of a retrace, but again, we just let it play out and stop it as soon as that daily closes out. So this is BOIL, looking at the long-term trends first. It's still very bearish on the monthly. It's still below the moving average of the price chart. There's no CCI for the monthly. On the weekly, we had this bullish divergence on the CCI versus lower lows on the price, and that actually bounced. And we're currently in a bullish mode at the moment on the weekly chart. And on the daily, you can see there it hit this resistance at 107.11, broken to the downside. We had this bearish divergence as well, and that CCI is still dropping, so that bearish divergence is still playing out. It hit our initial 23-38% range. Again, if you're new to the channel, I'll just draw it for you. That goes back to that significant low there. So that's been changed a bit somewhat. So that would have been that range would have been around that area there. So it's actually fallen below the 38% level, and it's currently approaching the 50% retrace level. So again, predominantly bearish movement on the daily. So if you're trading on the 1 hour time frame, you would have also noticed there was a bearish divergence back here versus higher highs on the price, and that actually broke down, hit our 23-38% range. That's actually broken below this diagonal ascending trend line as well, and still in dropping further. Now, if you look at the that's going to be the same as the daily. So if I draw a Fibonacci between that high and that low, it's currently, as I said, it's currently near the 61% of that range there. So that's still dropping. So predominantly short trades based on the daily trend. So what we have here is the trading back testing, and that I've started the trading there from when the daily broke below the CCI moving average, and so did the price, and that was around about the 12th of March. And you can see there the top chart here shows the profitability for the stop loss approach, and the second chart here shows profitability for the average down approach. Now you'll notice you'd still be in a trade today. You would have been in and out a few trades here on the stop loss approach and generated $219, and the average down approach has generated $204. But that would have been a lot fewer trades in that case. Hasn't retraced enough to average down, so it's all been trading one time only, entries only. What we have here for KOLD on the monthly, it broke below the moving averages of the price chart, giving us a bearish momentum. On the weekly, we did have this bullish divergence starting back in 2022 actually, versus lower lows on the price that broke above and started moving in line with that CCI, so it was giving us a bullish momentum most of that period, until it's finally broken to the downside more recently on the weekly. This is the weekly chart. And on the daily, it hit this resistance up here at 85.10, and it's broken down, and it's finally hit this support at 16.21. And notice that was a result of this, and it's bounced from there as a result of this bullish divergence, higher lows on the CCI versus lower lows on the price, and that's actually bounced and higher, broken to a bullish momentum on the daily CCI, and a fresh breakout to the upside on the daily price chart. Now it's probably a bit, you can actually start trading this on the lower time frames, but just be careful of this. This could be just a bit of a false break before it takes further downside. So I'd like to see the moving averages start really trending more to the upside as well. If we go to the intraday chart, again, predominantly long trades along based on the daily. You take on the short side and the long positions on the smaller time frames. Here you've got bullish momentum, bullish divergence versus lower lows on the price, and then actually bounced, and that actually just hit our target range in the last couple of hours of trade. That was drawn in our previous video, and we're still in a bullish momentum on the hourly as well. So I've got here the back test for long positions, and they would have started here when the CCI was bullish on the daily, and when the price broke above the moving averages there, and that would have been along that dotted line on our last video. So this indicated by these two back tests here. The top one's a stop loss approach, and this one's the average down approach, and they're both generating the same income, $140, starting from that back at this point. So, and only because the average down approach hasn't averaged down, it hasn't actually retraced enough to the downside to average, so it's kept the same positions open as well as the stop loss, so same return so far. And this is the short positions had you gone short back here on the daily when the CCI broke below the moving averages and the price was below the moving average, indicating by this point here, and you would have stopped out the position maybe at least once or twice, but definitely when it broke above here on the CCI. So that would have been along this point here where the crosses are indicated, and you would have preferably avoided going short from there on, only because the CCI started trending to the upside, giving you a bullish divergence as well. Even though the price did decline, you wanted to close out your position, so you just avoid that risk. And at that point on the stop loss approach, that would have generated 295, and the average down approach generated 346, but you had a couple of small average downs during that period. And finally, we look at UNG on the monthly. It's a fresh breakout just above the moving average of the price chart, although the CCI is broken above its respective moving averages. So bullish to neutral positioning on the monthly. On the weekly, we had this bullish divergence, and the CCI kept rising and still is rising from there after this bullish divergence, as I said, after the prices kept declining, and that finally broke higher and eventually confirmed the higher positioning around that period, around late January. So bullish, still bullish on the weekly, but just with the CCI about to move into that moving average range possibly. The daily hit this resistance at 24.13, and it's actually broken to the downside as a result of this bearish divergence, lower highs on the CCI versus high highs on the price, and that's actually broken through our 23-38% target range. Now that's still declining, so if we drew a Fibonacci to see where it may actually stop, we take it back to that level, you can see that it's broken through that 23-38% level, and it's currently resting at the 50%. And if it drops much lower than at 61%, then we're going to consider further downside, very likely. If you take this Fibonacci down to each of these levels, you can see where those retraces happened. It's actually gone and broken down below that 23-38% of each of those levels. If we go to the intraday chart, the 1 hour, during our last meeting, that was the fresh breakout to the downside, and that's continued. That's after hitting this 23-38% bearish divergence as well, and that's still declining, as I said, based on the hourly, and taking short positions only based on the daily. And lastly, for UNG, for the back test, I've started the back test for both the stop loss and the average down approach based on the daily, where the daily broke below the moving average range, and the price was also below the moving average range. So that was around about the 19th of March. So the stop loss approach has generated $80, and the average down approach has generated $65. That's only because of the couple of exits when they happened with the stop loss and the average down approach differences. So here are the back testing or trading parameters. So if you're trading on the 1 hour time frame, you invest per trade 1 contract, the first contract entered, and the average down limit of 15 contracts. So basically the contract entries, the first one is 1 contract, next lot is 3. You got a total of 3 contracts now running. Add another 4, you got a contract, 7 contracts running. Add another 8, and then you got a final of 15 contracts maxed. And every time you average down, you make sure it drops by at least 0.005% for a 1 hour trade or contract parameter. If you're trading on the daily, the average down is 5% decline. Now, trading shares is very similar. Invest per trade $1,000 per trade. So you invest first $1,000, next lot is $3,000, next is $7,000, and finally you got the max of $15,000. And again, average down by 5% if you're trading on the daily time frame, and take profit of 3%. If you want to follow the traditional stop loss strategy for trading CFDs on the 1 hour time frame, you invest 1 contract per trade, take profit of 0.003% or 3% for a daily trade if you're trading on the daily time frame, and a stop loss is when the CCI 150 turns into the moving averages. Likewise, if you're trading shares, if you're trading on the daily time frame, invest per trade $1,000, take profit is 3%, and again, stop loss when the CCI 150 turns into the moving averages. Obviously, you can invest more than $1,000 in any of these trades, but just you've got to be very careful of the your money management and your account balance. And I've limited it to 3% take profit on the daily and 0.003, the equivalent for the 1 hour time frame, because I found if you make it too high, in other words, if you aim for a 5 or a 10% gain, often you're a lot longer in the trade than you really expected, and it just gives you a lot more turnover when you're a smaller take profit return.
To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching, and see you in next week's video.